Good morning and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for the week of December 14th, 2015. If you guys have just joined us, welcome. We're going to do things a little bit differently this week, only because I'm kind of gearing up for the new year and trying to get some ideas out there in front of you guys as far as what kind of videos you'd like to see on the weekends. The service and the website as a whole is evolving, and I just want to make sure that everybody has the most actionable information they could possibly have. So today what we're going to do is we're going to go through the process that we use here at the Turtle Follower as far as a trend following process to go ahead and take trades and take trades off. We're going to look at the market. We're going to look at a couple closed trades that we made for the model portfolio and a couple of the watch list stocks that we have for the premium members. Now, if you're not a member yet and you want to try it out, head on over to theturtlefollower.com and you can sign up for a membership free 30-day trial and access the premium area where we'll go over these trades in real time. And premium members get alerts when trades are entering, and they also get alerts when during the nightly recaps for any potential closed positions. So first, let's just take a look at the markets as a whole. And last week we talked about the markets coming into a potential area of support, looking for a bounce. Sure enough, we didn't get that this week. And actually on Friday, markets closed down almost 2% across the board. The S&P was down 40 points. NASDAQ Composite down 111. The Dow 309. And then the RUT was down, I think, about 25 or 26 points. So from a prediction standpoint that we tried to do last week, didn't work out. But we always use the stock market outlook video as a potential basis for what we think may happen. But we always actually act upon the price action. So last week we thought we would bounce higher, potentially test the highs. The exact opposite happens. That's why we don't trade on prediction here. All right, we trade on reaction. So what we did for the model portfolio, as the market was going lower, we continued to add short positions, and we actually closed the week out. We did get hurt a little bit because we were rotating out of some of the longs, but on Friday we were down about $20 on the model portfolio. So that's a win in my book, and we'll continue to hopefully experience some of the benefits of being short some of these stocks, but as a whole, I can't complain considering the week that we had. So looking at the S&P futures here, you can see that we have broken down below this 20 or this 2,000 level that we talked about. All right, that was a level that I really thought should hold, would hold, and ultimately it hasn't. So now what are we looking at? Well, if we look here on the weekly chart, first of all, you can see that we've broken this level. All right, the next level that I'm looking at as a potential support is going to be right through here, which is right around 1984. So not far off. Remember, I thought we were going to hold the 2000 level. All right, that was the 2000 level. Didn't. And as I said, broke down below 2000. Next level is 1984. So right now, trend is to the downside. Bears have the ball. They're running with it. And look at what we're kind of speaking about. The 1984 level almost coincides perfectly with this trend line from the bottom. All right, so we had the bottom that we had in August, the retest that we had in September. That gives us a trend line. All right, and that trend line now may be where we ultimately head. Let's try and remove that trend line. All right, but now we're trading below the 50-day moving average. We're trading below that 2,000 level. I don't see any reason we don't at least fill this area and test the trend line. Okay, that's the next level of support. And then we're kind of back in this whole choppy action. The market's not going anywhere. The other thing we have to consider from a technical perspective and think about what other traders are thinking about is this could mark a double top in the market. All right, so usually what happens in a market at a market top is the market goes up, crashes, or falls back, pulls back, and then eventually tries to make its way back up there. That's exactly what we had. But where we didn't get, and we didn't get any buying pressure to push us through the highs here around 2020. Okay, So now what market technicians are looking at, and this is something that you need to know just because, understand what the players have in their minds, is now they're saying, well, you know what? People are selling it again at this 2130 area. All right. There's no reason for me to step in front of this. There's no reason for me to look at potentially getting along the market at these levels. All right. So now it could mark a double top, and it could be, as crazy as it sounds, it could mark a move back down to this 18,000 level. All right. Or maybe more. So for right now, again, that's just a prediction. We trade on price action. Next level of support for the S&P futures is right around the 1984 area. That coincides with a strong low from earlier in the year, and it coincides with the trend line that we've discussed from the lows. Okay. Now, as far as the NASDAQ goes, excuse me. As far as the NASDAQ goes, similar situation. Okay, broke down. Okay, remove this drawing. Broke down below the 50-day moving average. We broke below what I thought was going to be some support at 50 or 45.75. Next level of support right around this 44.50. And again, look at where we come into that same trend line. So looking at the weekly chart, if we identify some key levels, obviously this level here around 43.45 is extremely key with the lows that we had really throughout the summer. But as well is about 4,500, okay? 44.50, 4,500. That comes right into the 200-day moving average. The 200-day moving average has supported the NASDAQ for, as long as this chart goes. This is a 3-year weekly chart. Besides the little blip that we had in August and the pullback below the 200-day, the 200-day is usually a good spot to come in and see some buyers. So we're looking for that in the NASDAQ. I'm looking for that 44.50 to hold, and I'm looking for some strong buyers to come in and potentially bounce us off of that level. So again, still looking for some downside this coming week with the way the market closed on Friday and with the way these charts are setting up. Here we are with the Dow. Similar situation, okay? Again, we had this level here that we thought would hold right around 17,500. That didn't. Next level in the books, 16,950, right around 17,000. Well, you could see here, if we tweak this a little bit and actually incorporate the lows, 17,000 is right about here. Okay, so again, maybe not as much room to the downside in the Dow. Maybe it has pretty much consolidated what it's looking for. And again, we always want to go ahead and just tweak these boxes and trend lines to really understand what's going on. And you can see here that ultimately, if we have this pullback right around 17,035, all right, again, where does that come into? It coincides perfectly with the trend line. All right, but it also means that we are now trading below a downtrend line in the weekly charts. Okay, so again, different ways to look at things. I guess the moral of this little segment is there's a mess right now. Everything's a mess. All right, so just be careful what you're doing. There's no reason you have to trade from now till the end of the year. You could just easily take the last 3 weeks off and wait for, some more direction. That's perfectly fine. There's nothing that says you have to have your money in the market at all times. And if you're not willing to get short at these levels, I would just be very small to the long side. All right, make sure that your long trades are still working. If they're not, let them go. All right, so that's how I'm looking at those three indices. The last one is the Russell, and the Russell's just a disaster. Okay, so the Russell looks like it wants to just roll over and start trending lower. Here we are. You could see we had these consolidations, the stair step higher that I discussed, and now we're starting to step lower. Okay, so you have a box here, and then you have a lower box. Now we're hitting the bottom side of the 200-day moving average. We sold off. We had a huge down day on Friday. All right, and instead of having a trend line from the lows, which we thought we were trying to draw, because we're obviously at this point we're not. Now we're looking at levels, okay, and that level is 1,072.75. At this point, honestly, I don't see a reason it doesn't get there. Just looking at this chart right here, right now, this downtrend line was broken, we could find some support at the backside of the downtrend line, but it's not a great technical indicator. And again, this was one we really thought would hold this 11,000 or 1130, 1125. Okay, it didn't hold. As of right now, I don't see any reason this doesn't test 1075 or so. And again, just that's, sometimes people consider the Russell a leading indicator. I kind of look at them as all four as a whole. Three of them look like they want to go ahead and test a potential pullback area. Nothing out of the ordinary as far as the Russell. As far as the S&P, the Nasdaq, and the Dow. All right, nothing out of the ordinary there. The Russell, on the other hand, looks like a fully blown reversal and a potential to lead us lower. So depending on which school of thought you're in, it depends on how you're going to frame the next week or the next couple weeks. But for right now, for me, I'm looking at this as just a standard market pullback. I'm looking at it as we do have some further pulling back to do, if that's a word, and not necessarily anything more than that. And when we start to consider it being more than that is now when we consider it to, the markets to rally and fail, rally and fail, rally and fail. And now we're starting to get a series of higher or lower highs and lower lows. All right, similar to what we're doing here in the Russell. As far as, like I said, if we go back to the Nasdaq, you can see the exact difference in that we are still getting higher highs and higher lows. Okay, so if we still stay above this 4450 area, still higher highs and higher lows in place, as opposed to the Russell, where lower highs and lower lows are starting to become the norm. So again, depends on which way your school of thought is. I like to look at them all as a whole. 3 of 4 look like they're experiencing or exhibiting standard pullback procedures, I guess you could say. So that's how I kind of gauge my expectations. So now I think to myself, well, the market is pulling back. What does that mean for my trading? Well, it means that I want to continue to look at short trades. I want to be wary of taking a bunch of long trades. Not that I'm not going to take them, but I want to just be wary of understanding that the wind is in my face, essentially, in that the market is pulling back. I'm trying to go against the market as opposed to with the market. And that's really just how I use this stock market outlook video to gauge how I trade the model portfolio and my personal account. All right. And again, it may sound kind of crazy, but that's just the way that I do things. You guys may have a better way. If you do, let me know in the comment section below. And we'll move on now to going over our exact process and go over a couple trades that we closed for the model portfolio. All right. So looking at the small scratch pad up here, we closed a bunch of trades this week in the model portfolio. And 3 of those we're going to go over real quick. The first one is COG, C-O-G. And this was a short trade that we had made in COG. And what we did is, as far as our process goes, and again, if you're new here, sign up for the nightly recap, download some of the material within the TTF University, become a free member, just get on the list, and you could see how we go through these as we go through these examples here. But what we're looking for from our perspective is we're looking for a stock to continue its existing trend. So what we're looking for is a stock to break down from the weekly and the daily charts, either concurrently or within a certain time period. So with COG, we already knew that the stock was trading lower. Okay, it was trading below the 200-day moving average, and it had consolidated on the weekly chart, which you can see right in here. All right, at the same time that it was consolidating on the weekly chart, it was also consolidating on the daily chart. We finally got the breakdown. Okay, we know we're going short. We got the breakdown here on the 20th. We entered the trade the next day at the open on the 23rd. All right, now we're in the short trade, and all we're doing is following the trend until it stops. All right, so what we did very simply is we got in the trade, we put a stop loss here around the 23 level. We sized our position correctly for the amount of risk that we were willing to take, and we let the trade go down and down and down. And then when we started to see these two boxes that opened lower and closed higher, Then we started trailing our stop very tightly because we wanted to lock in some of those profits. So eventually what happened is we just brought our stop down and we started using the previous day's high as our potential loss area. And when the stock traded back through 17, we got out. Okay, so this was 17.15, I think, was our stop. We got out, and now the stock looks like it's rolling back over and looking like it's going to continue that downtrend. All right, so that's one way to do things. The other way to do things is similar to OGE. Okay, where OGE, similar situation. We already identified a downtrend. We're trading below the 200-day moving average. All right, we had a weekly consolidation. Broke that consolidation to the downside. Waited for it to set up because we don't just take the trade based off a weekly breakdown. All right, we're always looking for confirmation from the daily chart. Sure enough, the daily chart went sideways, broke down, right? Got in the trade, and then here we are. And essentially what it's doing is stair-stepping its way higher. So here we had identified another consolidation, another box. We set our stop right above the 25 level. And on Friday, sure enough, we were taken out of the trade. Now, obviously, it closed lower. And this is where your process and your whole personality comes into play. This is what I do for my trading account. And this is what I do for the model portfolio trading account. The more this account is more about making money than making 30% gains. Okay, so with that said, I use a stop order at 25.10. It got hit. I took my small profit and I exited the trade. All right, if you were a little bit more conservative or aggressive and wanted to let this run a little bit more, then you would most definitely still be in the trade and you would be looking forward to then go ahead and break down under 24.20. Now, one of the reasons that I do use stop orders, so those two we had some nice profits on. I think COG, we pulled in about a $200 profit. OGE, I think, was about a $50 profit. So all in all, not a bad deal. LUV, I want to show you one that obviously is the exact opposite, and one of the reasons that I like to use the stop orders on the trading account is LUV. Okay, so LUV, again, had this situation where we consolidated. Now we're looking for a long trade because it's trading above the 200-day moving average. We're looking for it to continue that trend higher, and that's exactly what we do. We're not looking for reversals. We're not trying to outthink the market. We're just trying to get on the trade and follow it along for as long as it can potentially go higher. So here we got in LUV on this nice little breakout. We'll actually identify that right here. Okay, got in that trade. Had a nice day up until about noon the following day, and then sure enough, boom, boom, broke down lower, and we got out of the trade with a full loss right around 44. And the reason that I use that stop order around 44 is basically that I don't want to think about it. After I get in the trade, I want to trail my stops, lock in profits, and if it gets hit, and I move on. I don't think about it. It's not an investment for me. It's just a means to an end to go ahead and generate some monthly income. That's how we consolidate and look at the trading account. Now, one that we are going to be exiting for the core account, just so you understand, and I haven't even gone over this with members yet, is FISV. And FISV, we're not out of yet because we use something called stop alerts. All right, so I set an alert. I trail the alert until it gets hit. And if we get a close below that alert, then I look to take action and exit the trade on the following day. So the stop orders, they get hit. They execute whatever time it may be. It may be 3 o'clock in the afternoon. It may be 9 o'clock in the morning, or obviously not 9 o'clock in the morning, but 10 o'clock in the morning, and they get hit. On the other hand, stop alerts, we had that alert in place. We had it right here, sitting right below the 50-day moving average, right around 93. All right, it got hit once, it got hit twice, but it never closed below that level. And sure enough, it wasn't until Friday that it closed below level. Now I will take action on Monday morning and exit that trade. But again, from a entry standpoint, stock consolidated. All right, broke out, set our stop in place. We experienced some nice gains. All right, you could see it was setting up again for a potential breakout. That's why we trailed our stop higher. We weren't trying to outthink the market. We're letting the market speak to us, or we're letting the market tell us what levels we need to look at. and we're reacting to the market. We're not predicting anything. All right. And finally, instead of breaking out, it broke down, trade's over, we move on. Okay, so that's exactly how our process works in the premium membership. Again, if you haven't become a member yet, go ahead, try it out for the 50-day or 30-day free trial. Check it out, and we're doing trades like this all the time. And the other thing that we do in the premium membership is we go over potential new trades. So there's a bunch of new trades that I'm going to go over with premium members this weekend. 3 of them I'll go over with you just as a little bonus. First one is Adobe. And you can see here, Adobe, again, what's it doing? It's trending higher. It's consolidating on the weekly. It broke out of the weekly chart. We're looking for confirmation of that weekly break on the daily chart. And sure enough, here it is. Okay. Consolidating on the daily chart. And now what are we doing? We're putting it on our watch list. And we're waiting for a close above 93. And if we can get that close above 93, we'll enter a trade and potentially put our stop at a close below 88. All right, so you could take this in a trading account, you could take this in a core account, whichever way you want to do it, but there's the setup. Okay, and it's very simple, it's nothing to think about, and all we're doing is setting an alert in there and saying, okay, if the stock breaks above $93, I want to be alerted, and if it does, I want to check back at the end of the day to make sure it closed above 93. If it did, I take the trade, and I put my stop in place, and we let it run, and we let it work. Okay? Again, not predicting. We're just reacting to the stock's market price and the market action, price action, whatever you want to call it. And we're letting the stock tell us what we need to be doing. Okay? So there's one setup in Adobe, another one in Boeing. Okay? And Boeing's a little different because it's not breaking out to new highs, but it is setting up a nice consolidation. Okay, so again, here we're looking at, let's first start with the weekly chart. Okay, we're looking at these levels here. As this consolidates right through here, we had the little blip in August that it pulled back, but we're looking at that as one big consolidation. And essentially, we have some resistance up around the 158 area, but that's something we'll discuss with members. But as far as Boeing goes, it's consolidating. It's trading above the 200-day moving average. It's trading above the 50-day moving average, and it's consolidating. All right, so what we're doing is we're looking for a breakout over the 150 level. And again, all it's doing is breaking out or is trending to the upside. And we just want to know when it's time for us to hop on the train and follow it to the upside. If it turns out that it doesn't ever break over 150 and it breaks down below 142, then fine, trade's over, we never got in it, and it comes off the watch list. Okay, but that's as simple as we make it here at the Turtle Follower. Again, it's a simplified method of trend following, and we're not looking to predict anything, we're just looking to react to market action. So there we are, another trade set up in Boeing over 150. Now as far as the last one goes, GE, okay, this is another trade that we want to just go over with you. This one has already broken out of a weekly pattern. Okay, you could see here, weekly pattern. It was trading for about 2 years sideways between the levels of 28.50 and 23.50. All right, so now what is it doing? It's trading above the 200-day moving average. It's trading above the 50-day moving average, and it's consolidating. Okay, so what do we want to do? What are we looking for? Well, we're looking for a breakout over 31. If we can get that, we'll either set our stop around 29.75 or maybe a little lower around 28.80. But what we do look for whenever we set a stop is that the stop is below the trend line, below the 50-day moving average, and below a key support area. Okay, so we try and use that three-pronged approach to make sure that our stops are not too tight, not too wide. And that is with the core accounts. With the trading accounts, what do? Well, we just wait for it to keep consolidating. Okay, perfect example of the trading account, the epitome of what we look for in a trading account is exactly what we have here in NVIDIA. And this is one that we were in. We got out of it a little early, but you know, it is what it is. But here is the perfect example of how you want to see these trades set up and exactly what we're looking for. A breakout from a consolidation, a move higher, another consolidation, a move higher, another consolidation, a move higher, and sure enough, what's it doing right now? It's consolidating. So if we were a little bit less aggressive and a little more patient on this trade, we would have still been in it, and we would have been in this trade with a potential stop right here around 32.20. All right, so this was a trade that we got in around 24.50, and technically there's no reason I shouldn't still be in it, but you know, sometimes things happen and you get a little freaked out about stuff, and here we are, 32.20, still in the trade. So that's exactly how you want a trading account position to look like. As I said, those are the two different ways we trade. Good insight into the model portfolio, a good insight into the trading portfolio, how we set up our watch list, how we use the stock market outlook video, what exactly our process is. So again, if you guys enjoyed this video or have any questions or comments, please leave them in the comment section below. You know, if this is something that interests you and you think would be beneficial, please go ahead, sign up for the premium membership, take that 30-day free trial, try it out, and I hope you guys enjoyed these videos, because this is kind of the way I'm looking for it to proceed. And if I get enough interest, I'm looking for it to actually be a live webinar. So at this point, we would take live questions and answers. If that's also something that interests you, let me know in the comment section below, and I'll be happy to implement it in 2016. Other than that, have a great rest of the weekend. I hope you guys enjoyed this one. Take care. Steve.